Hello and thank you for joining me for part 2 of the Oracle series. If you have not watched part 1, the link for that will be appearing on the top right here, or you can find the link in the description. In this video, we will be focusing on alerts and how to benefit from something I call the discount zones. The very first thing you'll have to understand that over here on the right side, what you have are alerts that you have set up. So these would be alerts that you've set historically, and that is kept up here. You can search through them, modify them, delete them, stop them. On the bottom here, what we have is a log of previous alerts that have fired off and triggered, and you would have been prompted by these. Typically, you would get an alert on your phone, email, and if you're on your desktop, you would receive it on your desktop. What we want to look at right now is an alert that went off yesterday, March 15th, and it's on the 24-minute time frame. So it's absolutely critical that I select the 24-minute time frame from my chart and then click on this alert. And there we are. And we do not need to see the right side. I will now open this up fully. And for the time being, we're not looking at Morpheus and Dozer, which are two of the indicators that are included with our memberships. As you can see here, we had a short go off, but this is the alert that we received yesterday. I'm going to remove this pane. So the alert would have gone off. Understand that this alert would have actually gone off after the candle close. We do not have alerts set so that every time this blinks on and off throughout the duration of the candle. The alert is set on candle close. So this alert would have showed up right over here. So we'll go back to that moment in time, and so you can understand exactly what I mean. So right here is where we received this alert. So now the very first thing that you want to do is just look at this overall and say to yourself, if this is a range, this looks like the bottom of the range and this looks like the top of the range. So in theory, this is not really a horrible place to long. Obviously, this would have been the best place to long. This place is not a horrible place to long. The question you have to ask yourself at that moment is, what is my risk management going to be? What is my target? What's my take profit? And where do I plan on closing this trade so that it works out for me? And for that, you can use this tool right here, which is a long position tool. Click that. Assuming this is happening in real time, you'd want to enter at this exact moment, and you'd want to have a target. I like to look for a ratio of 2-to-1. So that has worked out really well. Understand that if that is the goal, then that means your stop loss, in theory, because this is a low and this is a high and these are swing points, would have to be below the low, which would mean right now we're only getting a 0.38 risk to reward ratio. However, we need to bring this up much higher to at least 2, as I explained previously. That looks like a pretty long shot. And it looks like a very risky trade to me because the price has gone up quite a bit from the bottom, and that is a 8% deficit that we have to account for. This also doesn't allow you to use much leverage, because if you use a 10x leverage, essentially you would be losing 80% of your position should the price drop down from here. So one thing you can do is say, how can I get a better entry? And that is where the discount zones come in. There are a couple of ways to trade the discount zone. One of them is what I like to call the conservative discount zone, which is to ultimately put an entry at the very bottom of the candle. So the open of the candle, you would put your entry here and wait for the price to retrace, hit your entry, and then go up. The beautiful thing about that is if we put our entry here and we still go for that swing low, we're only 4.7% away from the bottom. And to get to our 2 risk to reward, it's much easier to get there, and it looks like it matches the high of this area. So that looks pretty realistic, and it's something that I as a trader wouldn't mind taking. So that's one style, and that's a conservative style. There are multiple ways to trade the discount zone. And the discount zone was discovered when I started to do a ton of back testing on multiple coins, and I recognized 80 to 90% of the time, if you find a good coin that Oracle works well with, then all you need to look at is every time there's a print, there's usually a retrace. I've noticed the 50% retrace has the highest statistic, But oftentimes, even a full retrace, for example, right here, you had a short entry and the price retraced even above that candle. So the open of the candle would be here, the close of the candle would be here, and the price actually surpassed even the open, but it never reached that swing that we talked about. So over here, you have your swing. In reality, can the price retrace all the way here? There is a possibility. However, can it reach half? Again, 80 to 90% of the time is all I have. So now the question becomes, what kind of trader are you? A super conservative trader or someone that is willing to take a little bit more risk? There are two ways to trade this discount zone. One of them is to put an entry at the candle open. Remember, the price closed here. That would mean at some point, you're assuming that the price will retrace down, pick up your order, and then go up. That is one style of trading the discount zone. The second way to use the discount zone is to select multiple entries. How we do that is we would place one entry here, one halfway on the candle, and one at the very bottom of the candle, giving you 3 entries with different position sizes. The easiest way to do that, so that you don't waste a lot of time trying to manually figure out where the center is and where the bottom is to use the fib retrace tool. I've created a custom fib retracement tool for this, where I would draw from the top to the bottom of the candle, and it would outline the entries that I could be looking at. Again, every trader has their own style, but for me, this has worked really well, and for a lot of our members. So the very first entry here, because the candle is closed, so we get first order of 20%. The second position is going to be right at the halfway point, right here. And that is going to be for 30%. And the last entry is going to be at the candle open. That is going to be for 50%. We no longer need our fib tool. By the way, before I leave the fib tool, I'll just double click it so that you could see how I've set this up. Take a screenshot and you can set this fib tool up the way that you want, and then you can save it as a template. We no longer need this, so I will actually remove it. Here's our entries. Remember, with Oracle, because we use a 24-minute time frame, after the candle closes, you essentially have 24 minutes to make some trading decisions. It's not something you need to rush, and people love that about it, because this particular strategy gives you 24 minutes, and on the 1 hour gives you actually 1 hour to set up your trade logic. So here what we have is 20% right here. So using an even number of, let's say, 100, you could go in with 20 here, 30 here, and 50 here. Why would somebody want to do that? Well, the reason being is that if you put 20 here and the price continues to go up, you haven't missed this trade. But if the price does decide to retrace, then you're going to have an order somewhere between these two entries. So I will delete this entry and pretend that this, which is 50%, once you get the 20 and you get the 30, that's going to be 50%, will be somewhere up here within those two areas. That will be your entry. Once this other order of 50% gets filled, your entry will be somewhere in the middle of these two entries, which would give you a new entry right over here. And now you will understand why I call this the discount zones. Because if you take your ruler and you measure from the top to the bottom, you have a 2% discount on your entry, and therefore we call it the discount zone. Now, understand that this is your entry. If you remember at the beginning, we talked about an 8% plus stop loss. Your new stop loss is 6%. So there you go. That's your 2% in savings. Your goal to the upside, if you're going to use a 2-to-1, is actually a lot closer. It's slightly above the swing high over here, but it's certainly not way up here as it was before. Another thing you can do is you can use risk management and understand that you maybe want to just take a 1.5 trade. Okay, that is very doable and very realistic. You can definitely take some profits there as well and continue to ride this, or you can fully close the trade. That concludes how discount zones work and how you can benefit from getting in with a better entry than just putting a full entry at the top of the candle, or at the bottom of the candle, depending if it's a red one, a candle close would be at the bottom, a green one, candle close would be at the top. Again, the conservative method would be to just have one simple order right at the bottom and hope that it hits. In the case of this example over here, the price did retrace fully, filled the order, never hit the top. So in this particular case, you would have put your 2 to 1. Let's put that 2 to 1 strategy. There you go. There is our first, let's get our stop loss in, okay? And your 2 would be right here. That's a beautiful trade. I hope this video helped you. In part 3, I will be covering a little bit more on how to use the other indicators in conjunction with Oracle to make the best trading decision and to see, was this actually a good long to take and was this actually a good short to take based on these 2 indicators and what's happening up here in price action. Thank you for watching. If you like this video, please like and subscribe, and I'll catch you guys again very soon.